Hey folksy, Rachana Ranade here, and I welcome you all to yet another Thursday live stream. I know for those who are wondering, it's an afternoon Thursday live stream. Yes, last Thursday and Thursday prior to that, I just thought that let me just try and shift the Thursday live stream timing and see how many people are joining because my team received few requests that it'll be great if Rachana can do a live stream during market hours, and if it can be short and sweet, that will be much more easier for us even to consume if possible during the market hours. If not, then maybe post market at night, even if someone wants to watch. If it's a shorter live stream, maybe 15-20 minutes, it'll be easier to watch at a later time as well. And that is the reason why I thought let me just try and change the format of our live stream. And that is the reason why last 1 or 2 Thursdays, I guess, I've been taking the live stream in the afternoon. Do let me know your thoughts as well if such live streams during market hours and as a crisper version they work for you all or not. So with that, let's get started. Two main things on the agenda today. Number one, we'll understand about the Nifty levels. We will understand what are the crucial levels that we should be watching out. And number two, we will understand, of course, in the first one itself, Nifty levels, agreed, of course, it's important. But what is driving down Nifty? Why are we back to the 23,800 level again? Which is the strongest level right now? What are the reasons why we are at that level? We are going to understand that. And number two, one company which everyone does talk about almost once a week, one for some people almost every day. It's Zomato, which is eternal. We are going to talk about their result as well, which was declared yesterday, and the stock was up 3% today. Right now, it's I think roughly a percentage up. So all these things are what we're going to discuss today. Quickly, first, let's have a look at Nifty and understand what is the key level. Where are we right now? So this is a range that we have been stuck for almost 1 month now, starting. I mean, I can say this is what, 15th June? Yes, since 15th June, this is the low that we have hit, and since then we are continuously in a sideways trend. At a lower end, thankfully, we have not broken 23,800 despite the fact that oil has shot up like anything. And at the upper end, we have unfortunately not been able to break 24,510. Okay. Now, why did I mention oil? Let us quickly have a look at the UK oil chart. And if you see, oof, look at this. The way it has shot up, if you just see, this was the level, a pre-war level, and the oil that touched $119 since then went sideways for some time and then kept crashing down. It did take us back to the pre-war levels, post which you can have a look at this from this bottommost point, which is 2nd July to today, which is 23rd July. UK oil or crude oil basically is up almost 39%. Has it had a significant impact on Nifty? 39% oil was up since 2nd of July. And if you can see here from 2nd of July, even if I'm talking about close price, from close, we are barely 1.25% down. That's nothing. That's absolutely nothing, right? We have been able to defend this very nicely. Reason for why we were able to defend it and what is creating problem, both will check. What is creating problem is this man has been creating problem for a long time. And yesterday he said that pharma companies in a flux over Trump's 200% tariff move on generics. That's what he mentioned yesterday. That we are considering a 200% tariff on generics. This would be a big blow if he actually does that. For a simple reason that India is called as the pharmacy of the world, and we sell a lot to the United States of America as well. And if we are imposed with a 200% tariffs, it will impact the pharma sector, number one. Number two, the biggest laughter point here is that India US trade deal talks are going on smoothly. People, I mean, there are certain reports that we could be in the final stages as well. And here is talking about something totally new, that there could be 200% tariff on pharma. This is extremely disheartening to hear such things, but he has said it, and that is the reason why again pharma stocks and overall sentiment was spoiled today. But what is the reason because of which the overall market has still not gone down like very crazily? That is, let us check the FII and DII data. So very simple, money control FII DI. That's what I just generally Google out. And here, if you can see that overall we are not in a very negative. In fact, we were pretty much positive from the start of the month. Here you can see last few days, barely. I mean, this is 16th July was kind of a bigger one, but apart from that, the overall selling has slowed down quite a bit. Now, if you have a look at the June numbers, see, June is 49,000 crores sold. And if you look at the numbers in June, the selling has been like average, massive. See, four digit selling to is common. This entire screen you can see as an example, all is four digit selling, and this is in crores, 1,000 crores, 2,000 crores, 4,000 crores, 8,000 crores selling by FIS. This was happening in the month of June, and right now whole month put together, we're at a negative 4,836. Right? In fact, this was like very rare scenarios where FII was the buyer, DII was the seller. Okay, we witnessed such a situation as well this month. So somewhere down the line, we are seeing that FIIs are slowing the pace at which they are selling. So good news for us for sure. But all these are at an index level, at a market level. Finally, what drives the market are the results. And I hope you are watching out our reels on Instagram. Every day we are trying to post at least one reel which is about the quarterly results. I did a reel on HDFC Bank numbers. I did a reel on ICICI Bank numbers. I did a reel on Bajaj Auto numbers. And today we are posting, or I think we just might have posted one more reel on a company which is a very small company comparatively, but it hit a 20% upper circuit post today's result. So Pooja, if today's reel has already been released, if you can just share the link, or maybe you can share the link of HDFC or ICICI so that everyone can just watch the reels and understand. So this is my honest effort on Instagram that, in absolute bite-sized information, you should be able to know what the results are. But in cases of certain companies where people know about the company in detail, I'm sure people would want to know more about the results, and that is the reason why I thought I should present to you some key numbers of Eternal. So we'll talk a little bit in deep about Eternal today. Acha, before we talk about these, first we'll take a bird's eye view. Revenue from operations up 182%, net profit up 268%. Both are YOY. On a QOQ, still 17% revenue up, but net profit is down 47%. Any reason for that? Of course, the question was immediately asked, why has the profit fallen sequentially? They're saying obvious reasons. Number one, they're saying more and more Blinkit dark stores are being added. More and more dark stores is equal to more and more employee cost, more and more electricity cost, more and more inventory purchases, and more and more depreciation. All these things are going to lead to increase in expenses, which will definitely reduce the profitability, right? So expansion of Blinkit stores. A second one is continued investment in new businesses, higher employee costs, the point that I was telling you, operating costs, and expansion into newer cities. Now, what I would want to show you is the letter which always is released. This is the shareholders letter, and this is like a Q&A format. But from the Q&A format, first let us focus on the consolidated summary financials. Have a look at this. We are first talking about the revenue, and this is segment wise, right? So first let's compare Q1 FY26 with Q1 FY27, and here you will see the YOY change. Food delivery up 33.1%, main Zomato up 33%, good, not bad. Quick commerce up 552%. This is a crazy change. Look at the numbers. Quick commerce was at 2,400 crores revenue, and this quarter it is 15,664 crores of revenue. It's a maddening up move, right? Going up again has improved from 200. Of course, this number in itself is very small, 200 crore to 300 crore. So it's a 53% increase. And B2B supplies, Hyperpure, has dropped massively, 54% down. But all in all, if you see, adjusted revenue is up 173% at an overall level. Now, very, very, very important point is adjusted EBITDA. At an EBITDA level, at least, are you able to go as a profitable segment or not? Food delivery anyways has been profitable throughout the last year and first quarter of this year as well. Okay. What about quick commerce? Quick commerce was in negative, and Q3 FY26 was the first quarter where it broke even and slightly turned positive. But now if you see 1, 2, and 3 quarters back to back, quick commerce is positive. And how? And you can see the jump from Q3 FY26 to Q1 FY27 from 4 crores profit to 102 crores profit. That's a big jump, right? Going out still EBITDA negative, and Hyperpure is barely positive. Okay, but with this, management was asked certain questions. So one of the questions I would want you all to focus on, that what sort of questions were asked and how the management has actually answered it. Very important point, because see, even if you have a look at this, I'll shuffle between one or two pointers, but they have mentioned that yes, revenue has crossed 20,000 for the very first time. Blinkit is becoming sustainably profitable. But one point is continued investment, expansion of Blinkit's dark store network. So question was asked that how much more? And for that, so let's quickly check the question as well. Blinkit seems to be increasingly becoming capital intensive with significant capex and net working capital. So what is the framework for evaluating whether this level of investment is justified or not? So they are saying that yes, it's quick commerce is not an asset light business like others, and they are saying that today we operate in 19 million square feet of stores, warehouse capacity, warehousing space across 300 plus cities. They're saying that we have invested 3,000 crore capex over the past 4 years, and they are saying that we'll continue this investment. And the point they're mentioning is that this is the most critical or important building block of our business and also biggest differentiator. They're saying we have confidence in this. We believe that in the longer term it will bring in healthy ROCE, and maybe that is the reason why they are continually increasing the overall spending in this specific segment. Very important point that I would want to specifically point out here is that they are saying EBIT margin is 4% of NOV. NOV is the net order value, same as earlier, driven by 6% adjusted EBITDA margin, higher end of our earlier guidance, which was 5 to 6%. So whatever guidance they are giving at an EBITDA level, are they actually going close to that? Are they almost meeting that? Answer is again yes, right? Also, one more question that I wanted to have an answer for. I found this question: any impact of fuel and raw material price inflation on the business? Any supply side challenges from the brand? Though currently they are saying no, we don't see any visible impact of as of now. But they have mentioned that they are seeing some sort of inflationary pressure. They are witnessing some inflationary pressure, but has not impacted production volumes or supply, is what he has mentioned, right? Very important point again, I wanted an answer. How are you responding to competitive tactics? Because this is again a very important point for quick commerce related thing. When it is about quick commerce, everyone is giving discounts left, right, center. What are they doing? They said we are not here to give discounts and sustain. They have very clearly mentioned that we would believe in giving more and more variety. They're saying wider assortment. We want to give better customer experience. We want to increase our expansion at a geographical level. We would want to fulfill the orders at a quicker pace. So all these things, they are saying that that's where we are focusing on rather than giving more and more discounts. So all in all, whatever numbers came up were very interesting, and that was shown by the stock price. Almost it was 3% up in today's morning trade, but after which Nifty's mood started to drop a little bit, and that is the reason why maybe we saw some sell off in the stock price as well. But right now, as I do the live stream, Nifty has recovered a little bit from the low, from almost touching 23,800 to 23,870 plus. So all in all, very interesting times to see whether Nifty is able to defend 23,800 or not. Tomorrow's closing is important. So weekly closing above 23,800 will give us some breather at least. So hopefully market closes above 23,800 tomorrow as well. So I hope you found a lot of value in today's short and sweet live stream as well. Do let me know in the comments, even if you're watching it afterwards, would you still prefer me doing the live stream in the afternoon, such short and sweet live streams around 15 minutes, or would you want it to be a longer live stream like we used to do, 30 minutes, 45 minutes sometimes, that too at night? What is your choice? Do let me know in the comment section. I hope you found value in today's live stream as well. I'll see you in the next one. Till then, take care. Jai Hind and bye bye.